Hello everyone, welcome back to another episode of Personal Finance for Us. Today's video is all about the last major asset class of the series, real estate. Now, real estate is very much a different animal than stocks and bonds. For those that love it and have the stomach for it, there's tremendous upside in real estate. The first major upside to real estate is that everyone needs a place to live. As long as the country's population continues to increase, although there are possibly threats of that not happening, go millennials, there will always be a need for housing. In fact, we're in an interesting time right now in that we're actually in a little bit of an affordable housing crisis. By that I mean houses that cost less than $250,000 and don't need any major repairs, and relatively desirable neighborhoods are lacking in growing cities. This is an effect of the continued low interest rates from 2008 that never really went anywhere. Money's been easy to borrow for a long time, and as a consequence, competition has erupted, and we've seen one of the hottest housing markets in many cities all over the country as a consequence. At that same time, the cost of building materials has actually shot up as well. So this has led builders to be more incentivized to focus on more luxury style housing because for effectively the cost of almost the same materials, they can make a luxury home or apartment and increase their profit margins. I know in my local area and even out towards the beach, every time I see a new construction apartment, it is almost always a luxury apartment. And I've seen the same thing down in Wilmington, North Carolina, right there on the river, because waterfront is hot right now. Luxury riverfront apartments. So it's really kind of happening everywhere. And this is creating more and more competition. Also in my local market, every new home subdivision that I see being built, the homes are never really less than 1,800 square feet. So this has created quite a bit of competition for a more starter home, 1,400 square foot size house. All this means opportunity for investors. Now, full disclosure, it's commonly said that a home is an investment. I don't really think that's true. I think your home is your home, and I think an investment is something that you hopefully look to collect some sort of income from at some point. The only way you're going to collect an income from your own home is when you sell it, but you still need somewhere to live, or if you do one of those reverse mortgage situations, or basically put a loan up against your house, which is debt, not income. So for the purposes of this video, I'll be talking about real estate that you don't actually live in. Now, of course, there are major downsides to real estate. The most obvious being that real estate is not a set it and forget it type of investment. Far from it, for the first several years anyway. I can literally open a brokerage account, buy some index funds, and not look at it again for 10 years, and it will likely increase in value, and I've done nothing. Real estate is a real tangible asset, so it doesn't work like that. The saying in real estate is you have to deal with the 3 T's: tenants, termites, and toilets. All of these things require time and money. While there are always ways to get into real estate for less money, always remember that using less of your own capital inherently increases risk. Despite real estate having a much higher barrier to entry, it's still a very popular wealth building vehicle. For one thing, homes typically appreciate 3 to 5% annually, historically. Now, obviously, many things can affect appreciation, and it's never a guarantee, but safe and desirable neighborhoods will see some appreciation. But that isn't the only way to make money with real estate. All right, so how can you build wealth with appreciation? Well, let's say you purchased a home for $100,000. If that home appreciated 3% a year for 30 years, that home would be worth a little over $209,000. Interesting side note, at the top of the chart here, they estimate that the $209,378 in 30 years will be worth about $97,974 in today's money. Again, this just illustrates the importance of investing because we are constantly fighting inflation. Now, what if you bought 5 properties and held them for 30 years? Not only are you retiring with a $1 million real estate investment portfolio, but you were able to collect rent while you waited. Now, many neighborhoods may not see as much that much appreciation. However, that usually means home prices in those areas are obviously cheaper. What does this mean for an investor? This means a higher potential for cash flow. What most investors do is attempt to pursue both. They buy an ugly house in a pretty neighborhood and fix it up, and this forces appreciation and helps increase the rent potential. But this doesn't mean there aren't opportunities in neighborhoods that have a bit of a rougher reputation. You would more likely be looking to chase cash flow in this instance over the appreciation, which in my opinion is fine. Appreciation is money that isn't realized yet, and cash flow is physical money in the bank. Further, real estate has a few major tax advantages. One major tax advantage is rental homes get to claim depreciation. Depreciation effectively allows the investor to lower their tax burden based on the need to make repairs to the investment property. Another tax advantage in real estate is something known as the 1031 exchange. Normally, anytime you make a capital gain on a property that you didn't actually physically live in, you'll have to pay capital gains taxes. With the 1031 exchange, as long as you are going like for like, and there's some room for interpretation there on what like is in the tax law, but anyway, as long as you are going from like to like, you can actually defer capital gains taxes. So an easy way to illustrate that is if you are the owner of a 16-unit apartment building and you want to upgrade to a 32-unit apartment building, you can sell the 16 and take the proceeds and put it into the 32-unit building, and you defer having to pay taxes. Another major positive for real estate is where you live. This is great because you are in your neighborhood all the time. You know if things are changing for better or for worse. This is a far cry from the stock market, which is manipulated by governments and company board members and stockholders. Because of real estate's tangibility, markets can be easier to feel out. You can literally go on real estate websites and determine if you think a property is fairly priced. If you're unsure about what to charge for rent, you can call up some other properties that are for lease in your area and see what the landlords are charging. Real estate is also a very interesting opportunity for African Americans. Gentrification's impact on Black Americans is frequently spoken about in our communities because, well, it usually affects us the most, and not for the better. Real estate tends to... Bruce.
Hey, Bruce, that's a good boy.
Real estate prices tend to be undervalued in our neighborhoods until someone suddenly realizes that a particular area has an attractive feature, like being on a river. I've seen this same thing happen time and time again, and I'm witnessing it now that I live in North Carolina as well. If people of color can invest and own their own neighborhoods, then that can go a long way in creating more wealth and more opportunities for those communities. That'll do it for this video. I hope I gave you something to think about. Many times in the investment community, the talk is stocks or real estate, but it's completely possible to do both, and many investors do. Do you think real estate will play a big part in your investment future? Comment down below. See you guys in the next video.